What's good, y'all? It's HB Punch and Profit. We're going to break down price action in the Nasdaq February 24th, 2025. But before we get started, like the video, comment down below, subscribe if you're new. Helps the channel, helps me find the time to provide you guys with free content. So, first things first, we're going to look for our higher time frame, roughly around 9 a.m. What I was seeing initially was bearish order flow. Uh, Roughly at 9 a.m. But that's why I never have a definitive bias for the day, because as we come down, things change. As the session progresses, we cycle back up to that higher time frame and we say, oh, shoot, there may be some buying opportunities. So on the day, it was predominantly, it was a neutral day, but I was predominantly looking for sells. But you could have made money buying or selling. So one, that's our higher time frame. Two, we're going to look for our signals, the inversion, and the advanced market structure shift. Inversion highlighted in the orange boxes, and the advanced market structure shift highlighted in a blue line. Usually our entries will be at the advanced market structure shift. 4, stop at the swing lows or highs, or at your discretion. Now, I always have to preface with this: if you do have a tighter stop, just be prepared to lose more trades, but you will get a better risk to reward in turn 5. Take profit at least 1 to 1 or more, or discretion. Once again, it's all about your trading style, your mentality, your psychology. I like getting in and getting out. I have two boys I have to take care of. I don't want to sit at a screen all day. And making, hypothetically speaking, some days 500, sometimes more. That's plenty than more than enough for me. So I like to get in, get out, 1 to 1. It's usually how I do it. But if you want to get these big moves, you can. You just got to work at finding a way to take partials along the way, and having one trail down with you. Okay, or having a runner, excuse me. So let's start at the 859.10. I didn't trade this, but I saw a nice setup in it. Roughly our inversion occurs here. Okay, we'll zoom in. Let me take this ICT indicator off. Bullish gap, volume imbalance. Make sure you take note of that. Bearish fair value gap here, volume imbalance. So that's where your inversion, BPR, whatever you want to call it, doesn't matter. That's where it occurs. Just know what it does. Advanced market structure shift down here at the blue line. Okay, you get tapped in if you put a limit order very nicely. And if you keep your stop at the swing high, the protected high, right here, this wick does come close, but it doesn't quite hit you. It just purges up. And I want to show you this massive move, not because you're going to catch this type of move. That's almost a 350 point move. It's more so to show you the power of these signals, and that this is what it can present to you. This is all the meat on the bone you can get off of it. Now, would I be aiming for that? No, I just aim for these lows over here. Okay, but I'd frame it like a 2 to 1, or let's just go 1 to 1. Let's see what that offers us, right? 1 to 1. That's still 28 points. 25 points with one mini, Monday through Friday, is 10K a month. So don't underestimate taking these modest small targets. But more was there if you wanted it. And remember, you can always move that stop down as the trade plays out in your favor. You can put it above the inversion. You could put it below it. Now, depending on how you framed it, let's say you put it above the inversion and you aimed for a 3 to 1. Right there, you hit it 34 points. You hit that target before you have this purge that would have technically stopped you out, or hypothetically stopped you out, right? So 10 point stop, 3 to 1, you would have hit your 3 to 1 before this happened. So it's all about how you frame the trade. Okay, get another signal here. This is the one I took, inversion, bullish gap, overlap by bearish one, advanced market structure shift, nice and tight, close to the inversion. Okay, you take little to no drawdown. Once again, if we just did the preliminary, stop at the swing high, still get this massive move for a 1-to-1. That is 65 points. Now, once again, you can bring it down, candle body high, move it down as the trade progresses just above the inversion. Just below, you still would have been good, and that's when you get that crazy risk to reward. Even with your stop at the swing high, you get a nice, let's see, you get a nice, yeah, look at that risk to reward, even with the stop at the swing high. Okay, so we continue to push down. You do get a signal to the upside, roughly speaking here. Inversion, advanced market structure shift. Now, I wouldn't have taken this trade unless I was very conservative about my take profit, right? But I wouldn't have taken this to begin with because it would be like catching a falling knife. There's way too much momentum to the downside. Now, yes, if I did hold this trade, hypothetically speaking, this low held, right, and it pushed back up, but I wouldn't be in that trade. I'd be waiting for some sort of signal back down, which I did. Okay, so let's get rid of this. Now, I'll say this. If you get a signal, okay, back to the upside like this, if you get a signal, you get the inversion, you get the advanced market structure shift to the upside, what that should tell you is we're probably going to chop for a little bit, or we're going to stay within a certain range. Okay, so don't be so eager to take that trade. But what I did was we got an inversion back to the downside because I was more bearish at the time, right here. Okay, I'm obviously not going to be able to play the advanced market structure shift. I'm looking for a quick scalp. And I basically entered where the inversion occurred, put my stop slightly above the candle body high. Okay, and I just aim for a nice 2-to-1 right there. So that was my little trade, and that was 64 points. You know, I saw people who saw this and they wanted to go for the low. You don't need to get that. That's plenty enough right here for you. That's a 2-to-1. Okay, and we come down here and we wick to the candle body lows right here. And if you see this and we're starting to move back up, all you do is wait for the signal. If we get a wick into the lows, the candle body lows, okay, of the most recent swing low, and we start moving back up, look for the signals I give you. Okay, this one I missed out on. It was very subtle. I was mad about it because I knew it was going back up, but I just didn't see this. I wasn't paying attention enough. Bearish gap right here. Let's mark that out in red. Start from the volume imbalance. Right here, red. Volume imbalance here. There's a bullish gap. We have a volume imbalance. If you do not zoom in or pay attention, it's hard to see these things. Okay, now you see where the overlap occurs, right, between the bearish gap and the bullish gap. So we'll get those off. We have an orange box to indicate that's where the inversion occurs. You get this advanced market structure shift right here, little to no drawdown, candle body close above it, put your limit order in. If we frame the trade, we get a nice one back to the upside, and you know that in this case we're definitely taking out this high, but I would have aimed for a 1-to-1 if my stop was going to be this low. That is 87 points, but if you want a tighter stop, just below where the inversion occurred, just above it if you want it tighter, and you're good, right? Potentially goes up to about 140 points. So that was another nice trade. Or you could have waited till we return to a higher time frame gap. If you go to the 15 minute, right, you're still bearish, but you're waiting for that signal back to the downside. You get this bearish gap right here, right on the 15-minute time frame. We get into it, we do not close over it. We hit pretty much like just above consequent encroachment. So you get this signal, you can play it up into this 15-minute gap, wait for a signal back down. Okay, when we get up here, another thing you can do is if you take this trade right here, start at the 9:30 opening, which was roughly around here, and you measure the range from its high to low, and you can play this signal up into the 50% mark of the range, or the equilibrium, which you hit. Boom. Once we hit that 50% range, now you can start looking for moves to the downside, but you're going to have to be patient and wait. Usually you will consolidate for a little bit, which we did. Let's get rid of that, and we're going to mark out where our nice move occurred. It was in here. Took a nice little scalp in here at this move. Okay, now if you don't zoom in, you don't see the volume imbalances. Volume imbalance, bullish gap, bearish gap, overlaps it. Roughly speaking, advanced market structure shift, you could have played at these candle body lows or even this one. Okay, let's frame the trade, and you want to, because we're bearish on the higher time frame now and we hit our 15-minute SIBI. Okay, even if I keep my stop at the swing low, we're going to aim for that 15-minute low back down here. So let's stretch this out. That 15-minute low right here, that's 161 points and more. So there was your trade. Now, once again, keep your stop above the inversion. Just below it would have been a little bit risky. Just above it, or just keep it at the swing high, or just maneuver it down as the trade's going out your favor. So you saw what it presented. This is HB. Punch a profit. Comment down below. Like the video. Subscribe if you're new. Peace.